The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. This morning I want to start out with the stock market and especially Apple. And then I want to talk about silver because we've broken down below the 618 retracement with a lot of gusto to the downside. That level at 30.50 did not hold, but we'll talk about that a little bit later. Mainly, I want to start out with Apple. That's the big news. And, the stock gapped up more than 10% today, and I know you folks think this is, it's never happened before and it's really spectacular, but folks, this is nothing like what happened in 2000. I want to cover that just a little bit later, just to show you the relationships of what happened then and what is happening now, because markets tend to repeat themselves quite a bit, and we want to try to keep our our sanity, I guess would be the word, to see this. But they're trading normally. This is really nothing new. I mean, when I listened to the analysts last night on Bloomberg, it was amazing. I thought Apple would be trading at 800 right now because they compared it with Microsoft and a couple others. The fact that it was trading cheaper than Microsoft, and I forget one or two other stocks, and that it's just way undervalued. And when you look at it, the way the numbers came through, I guess they're, so spectacular that it should be trading at 700 and something, I guess. But, maybe that's the reason it's not at 700. That I don't know. That's why I'm a technician. I had a question from someone yesterday about half an hour before the close, because my trade of the week in the newsletter this week was to buy Apple on the big AB equals CD pattern that occurred, because that's what Gartley had said, that the best pattern to buy is the first AB-CD pattern in a bull market. And that's the first AB-CD pattern we've had in Apple in about the last 5 or 6 months. And it missed the exact number by, I think, $11 on the downside. I was looking at I believe 547, and it got to 555, so about $8, I guess. And the gentleman asked me, he says, well, he gave me some statistics about in the 25 quarters that Apple has reported, they have exceeded expectations in 21 of those 25. I believe those were the statistics. It was better than 90%. And I told him, I said, if you want to be long the stock, I said, it's close here, look to buy a call. And so he looked to buy a $600 Apple May call, and it was trading for $5, and today it got to 20, I believe. But I don't know if he bought any or how many he bought. But I told him, I said that would be the best way to do it if you're afraid. But it's really amazing how the analysts in this stock, everybody missed it. I mean, every single analyst didn't think it was going to go up 94% income. I mean, that doesn't make any sense to me. If I were an analyst and I was long the stock, I would always lowball what I thought it was going to be. So if it did disappoint, at least you'd be protected. So this is just normal what's going on. I want to put up a chart of that ABCD pattern just to show you the same thing that occurred a few weeks ago when we were looking at the dollar versus the yen in the Forex market, when it made a perfect ABCD down there at the 80.25 level, and has since rallied well over $1,000 in that time frame. And so it's just another pattern. That's all it is. It's just the AB equals CD pattern, and we see it over and over again. That's what we're trying to do, is to find the patterns, and find ways that we can reduce our risk and things of that nature to keep the fires burning at home. And I want to talk a little bit about the history of what's happening now and what happened in 2000. I know many of you folks have not or don't remember or weren't around in 2000, 99 and 2000 when we had the the big move in the market, and that NASDAQ was at 5,000. Then it broke 85%. But I wanted to show you, one of the stocks that was very, very important at that time. And I happen to know the people that actually, know that started this company. It was Sycamore Networks, and the symbol was SCMR. It was started by a young man who couldn't make it in college. He was in his garage, and they started it, I believe, in 1995 or 96. And at the time that the stock was, brought out, in its initial offering, I forget what it was, but you can see it went from 2000 to 15, so it's basically, dropped 99.9% of its value. But the mother of the young man had just lost her job, and a friend of mine had hired her as a what do you call these things? I can't remember. Somebody in real estate that does things with mortgages. I don't remember what the exact thing was, but she was working with the mortgage department. And then when the stock came out, and he gave his mom half of 1% or 1%, she was worth about $5 million. And she walked into the office, and it was right during the busy season. And Greg, who owned the office, she told him, she says, "Look, I don't have to work anymore. I quit." And he says, "Well, could you at least help me out, through these next few weeks?" And she gave him the big FU and said, "Hey, I don't have to work anymore. I'm rich." And that stock is now worth about 10 grand, I believe. So, you got to be careful in some of these things. But these markets, like Apple, that moved, up $50 or $60 in one day like this is nothing. I mean, compared to what happened in 2000 and 1999. These markets would gap up. They would double in price sometimes. It was just absolutely amazing what would happen. One of my favorite stocks to watch during that time was the stock that owned by Mark Cuban. It was Broadcast.com. And the day that Yahoo bought them for $4 billion in cash, the stock traded. I'm not joking, folks, because I still have the chart on it. The stock traded 360 points. It was trading for about $160 a share, and it had swings of more than $100 a day 3 times on that day when it was bought out. And it was just the most amazing swing that I've ever seen. The turnover and volume was just, really unbelievable. So this is, what's happening in Apple now is, looks really spectacular and everything, but frankly, it's nothing compared to what happened in 2000. There is absolutely no comparison at all. So we want to keep that in mind, when we're looking at this. Now, the next thing that I wanted to talk about that I think is really important here. By the way, the Fed is coming out today. I don't know exactly when they're doing their talk. I don't know if they'll do very much at all. Pretty much the markets have got all the information that they need. The Apple news has moved the market probably more than anything that I've seen in recent time. I guess the stock should be worth 800. They just should come out and price it at 800 and get it over with would be my guess. But that would be the easiest thing to do. But I think the best thing to do is because I base a lot of things on the cycles that I use, and I go back and historically look to see how these cycles work. And I would like to go back to the time period of 1999 to 2003 and just show you the overall, how the stock market reacted to the Bradley model during that 4-year period. Now, I had to squeeze it together on the chart to get all 4 years into the thing, but you'll be able to see that the overall trend was better than any economist that was out there. And, it did a pretty good job. It hit almost the exact bottom in 2003. It missed it by about a week. It had the top in 2000, very, very close. So it was really, very, 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 very good. And I'm going to put this up. But if you get a chance in Tiger TV, go and take a look at this, because this is a really important piece of research. It just shows you the cycles that are there. Has nothing to do with earnings. Has nothing to do with the Federal Reserve. All it is are the cycles of the market and whether they're bullish or bearish. And if you can see, we had the September 2001 low, the 911. Actually, the market was closed for 6 or 7 days before the final bottom came in around the 20th of September. And then we had a huge rally that went all the way up to the 786 retracement into March of 2002, and then the market came down, and then finally made its bottom in 2003 at a far lower level. So this is why we want to keep an eye on the cycles and how the cycles are working. And as I've said many times, and we've shown it many times in here, that the Bradley model is most probably topping in here. It hasn't given we need to get below 1335 in the S&P. And whether it can do that or not, remains to be seen. But this is what it should tell us if it does start down, and then we'll be able to look at it. So right now there's a very big rally going on just because of Apple. It triggered everything. It triggered everything across the world. I mean, it made the European stock markets go up. Made the Asian stock markets go up. So that's the emotionalism that's there, and this is what's similar to 2000. We had that same type of situation occurring, when we were doing that, that type of move at that time. Now, the thing that we want to keep an eye on is the fact that, we've had some pretty good moves, wild moves in the stock market, and if you want to keep an eye, on the Dow Jones Industrial Average, on a looking at it over the last couple of weeks, you'll see that we had the big move down on the 11th, and then we had the retest a couple of days ago on the 23rd, and we had a pretty good rally yesterday and today, but frankly has done nothing, to damage the bearish technical picture, in my opinion. And if we do happen to close lower in some of these things, and especially Apple. If Apple would close, in the lower part of the range today, I know you don't think that could happen, but there's still 4 hours to go. But if it would, close, say, around, let's just give it a wild guess, 575, somewhere in that ballpark, and you're long that stock, I want you to do yourself a favor. Go downstairs into your kitchen and take out a little mirror, a little hand mirror, and hold the hand mirror up and look at it and say, I just saw the most bullish reports that God has ever given a stock, and this stock could not react very well, and why do I want to be long? Now, that might not happen, but this stock has got the most bullish news that you could ever happen to it. I heard an announcer today saying that if you see a $3 correction in Apple, buy it. And he might be right, but his first $3 correction hasn't worked so far. But that's just the bullishness that's in there. There's no one that is bearish this stock, and I'm just saying, just be really careful in here. Now, when you get everybody on one side of the boat has a tendency to tip over. So you've got to be, extremely careful, when you're doing these things, and that's the main thing that we're trying to do here. Now, I know we got to pay a commercial here. 877-927-6648, and I'll be back with you after this break.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648, and silver is continuing to break down, and I'll cover that after we take the next break. But once we broke below that 30.50 per ounce level, that really put a red flag out. And we've got some other ones. It wouldn't take much for gold to get below 622. If that happens, we got this stock market is going to have a whole lot of trouble if these commodities break down. I feel real strongly about that one. We made another 50% retracement over the last 2 trading days in the S&P cash. We've made a 50% retracement of the long-term move in April with the Nasdaq. It was came within, I think, a half a point in the Nasdaq of making an exact 50% retracement off of the April high. Of course, the Bradley date came in on the 30th, so there was one on the 23rd, another one on the 30th, and so it's still to the downside. This is, I think it's all caused by Apple, but I could be wrong, and the rest of the market might pick it up. But I'm really watching these commodities because if they fail, that's telling us a whole lot of what's going on. And silver, to me, has certainly failed. It hit the 30.50 level several times and has broken down. And this is not a good sign if you're long the silver. It would take a complete reversal today to change that. So we'll have to take a pretty good idea of what's going on as we look at these commodities. And it's important because this is what happened in 2008 when the market finally started to go. It was really beginning to make things look pretty negative on a long-term basis. Now, what I'm going to do is to put up the DBA for commodities. That's the ETF, and we've had a really big breakdown below the 618 here. And we're lower today. We had the equivalent of a $3 rally, a 3-day rally that did absolutely nothing. So if it does, continue to fall apart here, this is going to look, very, very ominous. And the reason why the commodities and the stocks are related is because it's related to the production of the materials and stuff like that. And believe me, folks, let me tell you something. If good news like this can come out with Apple, there's always a possibility that some bad news could come out for Apple. I know you might think that could never happen, but things like this do happen. They have a tendency sometimes to stretch the truth a little bit. I know that Apple is not Enron, and it's not WorldCom, and it's not CMGI, and it's not Juniper Networks, and it's not Sycamore Networks, and I can't remember all of those little stocks that were that went from teenagers to octogenarians in a matter of a few weeks back in 1999 and 1998. But things can happen, where things happen. It might be a supply problem. It might be, who knows? I'm not going to try to think of what it could be, but something could happen. All I do is look at the charts. All I know is that markets that go up usually have a tendency to come down, and we had a big ABCD correction in Apple, so that does tell you that some people were a little skeptical of Apple. Now, these earnings that came out, they were spectacular. There's no doubt about it. All I'm saying is just be careful up in here because these commodities are starting to shake, and they're shaking badly, and that's why you've got to pay attention. And I'm not going to be on the show tomorrow for the commodities because I had something that's been planned in the family for a long time that I must do. And so Basil's going to come in. I'm going to cover a few things on the commodities in the last part of the show, particularly gold, silver, and soybeans, and also cattle, because we have a situation in cattle now that is getting very serious with this. They found a mad cow. I don't know what he was mad about. Oh, I remember. That cow was not long apple. That's why he was a mad cow. That was my attempt at humor. This is why I follow Basil instead of preceding him. So anyway, we want to watch these commodities real closely. Even Basil referred to it today. And so I think it's important, to keep an eye on the commodity markets. The other market that looks, real interesting here, as far as the way it's held up and where it sets with the things, is the crude oil market. Today we completed a big AB equals CD move on the upside. It stopped exactly where it should have, up at that 104 level. And here's another situation. If the market, the crude oil goes below 101, I know it's a couple bucks away. This could cause, real problems in here. But it should have went blasting above 105, and it didn't. So we have to keep an eye on that. We got to take a break here. When we get back, we're going to talk about silver and gold. 877-927-6648.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. This is Larry Pesavento with TFNN, and we are talking about silver. And we have now broken substantially below the 30.50. We're making new lows. Silver and gold are now moving down rapidly. So be careful, folks, if you're long some stocks, because if these commodities give up, this is what happened again. And markets have a tendency to repeat themselves. I'm just trying to alert you to to protect your capital, because there's nobody else going to protect it for you other than yourself. That much I'm 100% sure. So the only way silver can be bullish now is if we were to reverse and close above the 30.50 level, which it would be a pretty significant change in trend today if it were to do that, but we'll have to wait and see. We've been expecting the 30.50 to hold. It held it extremely well for 3 days, and today it was the third day, and then it totally fell apart. So and gold is not very far behind. If gold goes, but we've already hit the 1327 level on a fast trade in gold, and if it breaks below that 1322 level, 1622 level today, that will be a sign that it is not doing very well at all. So we'll have to keep a close eye on this at the same time that we're watching the other things. Now, I want to mention the euro, because we're at a real critical level in the euro last night. We've been watching this 132.30 level, and we've hit it for the third time in the last several weeks. Last night, right in the middle of the night, when the markets were going crazy, and we haven't gone above it by more than a tick or so. And, that's why it's held up incredibly well, I think, because since last April we've completed an ABCD there at this 132.30 level. And the high last night was 132.33, taking out the high from 4 days ago by just 2 pips. I happened to be up at that time, which was around very early in the morning, and to see that because we've been waiting for that number to be hit. Now, the number in the U.S. dollar, that 79 number that we talked about has been relatively good support so far. So we'll have to wait and see if it's going to continue to hold that level, and we'll have to wait and see if it will go from that point. So we got to keep an eye on the euro along with the U.S. dollar, and I'll put the U.S. dollar index up because I know a lot of you folks follow it, because I believe that we've got a chance for the U.S. dollar to be pretty strong if it'll hold these levels that we're looking at. We've made the big ABCDs. We still have a potential for the U.S. dollar to break down to the 77 level, and that would mean that the euro would have to reverse and go up to about the 136, because the euro is about 53% of the value of the U.S. dollar index. But right now it's setting right at a really important 786 retracement at that 79.20 level in the U.S. dollar. So we have to keep an eye on that very, very closely. Now, I want to talk just a tiny bit about the cattle market for a couple of reasons. One is the fact that when we were talking about this, way back in March, when it was making a high up at the 1.618, we had a big butterfly pattern that occurred there. And everything was bullish. Everything looked great. Now, this just shows you how things can change. And I know it's a commodity. And I know it has nothing to do with Apple or anything like that. But, folks, these are all related together because it's related to money. And money is what makes us jump around on these markets, because that's what everybody's interested in doing. And so now what's happened is, we've had some bad things happen in mad cow disease. One cow has died, and that doesn't mean there's others out there, but that's a very, very significant thing. In 2003, cattle consumption dropped about 83%. And the exports were almost the same. Now, whether they find more than one cow, I don't know. But it's a fact that they got to be very, very careful, because this disease can spread and cause a great deal of problems. So just keep an eye on the chart patterns. They've actually, I think they'll lead the way, because the charts, they follow what's happening in the news. The news follows the trend. By the time you get the fact that the news is having bad news, the market's already down, 15% in cattle. And, so this is why you have to pay close attention to your positions and, to watch them very, very closely. Now, I am going to take a little bit of time here to talk about one other market that I think has potential. In fact, I want to talk about gold for just a second here, because we are now we're coming down pretty hard here in the gold market, and I want to. In fact, my prices are not. They're jumping around so much, I'm not even sure that they're correct. If you'll give me a second, I want to update this chart before I send it out, because it's showing me that we have, we're having some pretty wild swings down here at the 1320. This is the level that we talked about 2 days ago. This 1323 level. We've been down to 1325 again, and if we break below the 1325, we should have a whole lot of stops in there. I'm showing 16. Why do I keep saying 1329? That must be the market must be getting ready to go there. No, that's a joke, folks. I'm showing 1630 in the gold. We've tested 1626 twice now in the last few minutes, and whether we are going to break below it or not, we'll have to wait and see. But it's an important day today. We've got still 3 hours and 20 minutes to go in the stock market. and the commodity markets, and just keep an eye on these commodity markets, because if they do fall apart, it's going to be a sign that it's going to be difficult for the stocks to, have a move, to the upside. That's just the way that I see things, in a little tiny crystal ball that's quite muddy sometimes, but that's what it looks like to me, that we are in the process of, these commodities are at real critical levels. And so we'll have to, just give it a chance. We want to take a look at copper, because, here the stock market has had this tremendous run. And, we've had a 5-day rally now in copper. And if you have a chance to come into Tiger TV and take a look at this 5-day rally, you'll see that this has been about the most meager 5-day rally that we've seen in a long time. So, it's been 1, 2, 3, 4, 6, 7 days now that we've only been able to rally 9 cents in copper, and we had a tremendous bullish market, today, and yet copper is, barely up on the day. So it's very, indicative of maybe something in these commodities is telling us that they might be ready to turn down. So we don't know for sure, but we'll have to wait and see. Aha! Someone has saved my life. Dan in New Jersey, are you there?
Yes, sir, I am.
How are you? What can I do for you?
Well, it's good to hear you back in action.
Yes, thank you.
Yes, sir. Two questions. I typically follow the IWM. I see that there was heavy volume this morning, and then it just kind of dropped off. I know you're not much on volume, but it's looks like it's basically died off over the past hour or so.
The reason why I'm not much into volume is because my good friend Tom O'Brien has forgot more about volume than I'll ever know.
Yeah.
So I listen to the show each morning, to he and Steve, just to hear about the volume. And I agree with you. And not only that, but the stock is in the lower part of the range already today. It couldn't even take out the highs of last week, given all that bullish news. And you would think that the small caps, would be easy to do that, but in fact they haven't. So we'll have to wait and see. I think that, the high we made, back on April the 2nd, I don't think we're going to take that out. But today's close is very important. We've only got 3 hours and 15 minutes to go. But if we should close very badly in the Russell and the, the NASDAQ and the S&P, and I'm looking at if the S&P goes below, say 8. Let's get the numbers right this time. 75 or so, 1370, somewhere in that ballpark. I mean, given the fact that you had all the bullish news on some of these things, there's been some bad news, but Caterpillar and a couple others, but overall it's been a pretty bullish thing, and the Fed will probably give us something bullish to hang our hat on too. So you're right here. I'd be careful.
Okay. And I did have one other thing, and my thoughts were, it seemed like it would be some good time to, distribute stock and then sell off after the Fed meeting. But I was kind of curious as to what your thoughts were. I mean, can the new moon cycle date be coming in on today?
Oh, no, it's never that far off. So, it's usually just no more than a day or two. It was the 21st, so I'm assuming that it came in on Friday. And then the 23rd was the P index date, and I don't know if that's the reason why we're having this big rally. I did mention in my newsletter is that the period between the 20th through all the way to May 5th is incredibly active with a lot of different cycles. And some of these cycles are not just astro cycles. These are cycles that are geometric cycles. In other words, historical cycles that go back in time that match patterns. Do you understand what I'm saying?
Yes,
good. Like I'm saying, I'm comparing something to March of 2009 or April of 1997, something like that. We compare these cycles to see, because markets repeat over and over again, and if we can find that rhythm or repetition, that's what we're looking at. That's one of the things that Basil really does a good job at looking at historical stuff. He remembers 2000 and what it was like. And what's happening now is this was a sleepy day in 2000 compared to what we have now.
Yes, sir.
Okay.
All right. Well, I appreciate it.
Hey, thanks for calling in, Dan. I certainly appreciate it. We got another caller, Jim from Palm Harbor. Are you there, Jim?
Yes, I am, Larry. I wanted to talk to you about stop placement on the E-minis.
Sure.
I shorted. I was watching that cluster, that 1381, and I shorted this morning. I had to run away. I put my stop at 1386.75, and guess what the high tick is today? They caught me.
Well, that's the right place to put the stop. 5 points is probably the best place. I mean, you could risk a little bit more on a real high volatile day like today, but I know that 786 number. I was watching that, and it looked like it was going to hold relatively well, and then Apple had one more burst, and that's what shot the thing up a little higher. But 5 points is what I look for, when I'm trading the E-mini S&P.
Well, I didn't know if you could pull another chart because I'm looking at, again, if we do have the failure again, I've taken a small position again at 1382. We're just hanging here. There's been no positive response to the Fed right now, and if we do sell off,
I think you're.
Well, I didn't know.
Excuse
me. You want to enter it again? Which way you do? Would you look for a break at 1378 or?
Well, actually, if you're looking to enter the S&P on that particular way you sold it at the 82. We came down from the 86.75. And frankly, I don't think you're going to get much above 1386 again. And if you break 1380, let's say 1379, that would tell you that yes, you're probably getting ready to have a reaction to the downside. But here again, you don't have to risk more than 5 points.
Right.
That's the whole thing that we're looking at.
Just look. It'll be an interesting, like you said, anything can happen in a 4-hour time frame. Well,
that's true. We're having a great deal of emotionalism. There's not, the Dow's only up 52. Apple's up 46. It's near the low of the day now. And if Apple gives up the ghost, people are going to be looking in that mirror that I talked about, and then you have a chance to see if it's going to do. But also keep an eye on the commodities here, Jim, because if gold gives up, silver's already given up, and if crude oil gives up, you're going to be looking at some pretty serious things. So we'll see how
that's one thing. I haven't been watching the commodities, so I appreciate that heads up.
Okay.
Thank you.
Okay, thanks for calling in, Jim. I appreciate it.
Okay, have a great one.
You bet. We need to give a little talk here about the Treasury bonds because I think we've got a chance here to still make our number. I think the Fed just came out and did something because I was following the Fibonacci numbers on the Treasury bonds, and what happened is in the last the last 15 or 20 minutes we've had a pretty big break off. The market had come down and stopped exactly at the 786 and rallied exactly 1 point, and then we came back and went right back down and made a new low on the day at the 786 again at that 140, 118. So that's going to be pretty serious support. Anything around this 141 level is pretty good support, so we'll wait and see. Given the fact that the bonds have held up all this time and have been in this long trading range, and the 135 being the low, we've still got a shot at 150, and of course Tom thinks we're going to 160, and that's a possibility too, I suppose. 877-927-6648, and when we come back, we're going to take a look at TPT.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to finish up the show talking a little bit about the bonds again. The TPT, which is the ETF for the bonds, hit the 786 a couple of days ago and now has had a little bit of a rally in here, so we'll have to just give it a little bit more time to see if it's going to move. I understand that the Federal Reserve said we're going to have low interest rates until 2014, but remember they can change their mind at any time they want, and we'll have to just play the charts and see what they're going to do. Now, I have only very little time left here, and what I wanted to do was to mention, I'm not going to be on the show, well, as I've told this before, but we've had a very interesting thing happen in the soybean market that we talked about on the show last Thursday, and that is we've exceeded the tops from 2011 and 2010, and we went above that 14.75 level. We're trading at $14.72 now. We got just under $15 a bushel. There's a possibility here that we could be seeing a major top in the soybean market. It's still a little too early. There's no entry point right in here. It's been up for, I think, 14 weeks in a row. And, all we're going to be doing now is just keeping an eye on it to see if it works. But we have more time to do that. And what's amazing is that, soybeans happens to be part of the ETF for DBA, and it didn't, help the DBA very much. So we'll have to, keep an eye on that also. I'm always saying keep an eye on that. I guess that's my calling card. The main thing to focus on today, we've got only a few minutes left, is to keep an eye on these commodity markets, particularly gold. At if it gets below 1625, that really tells you that it wants to go to 1580. Silver has already broken down. Once it went below the 30.50 an ounce, it was really not a very good sign in my opinion. And so we'll have to keep an eye on that. If the S&P goes below the 1376 level today, which was the low before the last run-up, that would be a pretty bad sign. Also, it's still 3 hours to go, so anything could certainly happen. And the other one, well, that's basically it. I mean, we're in an area of cycle-wise that we're going to have wild swings. That was the one thing that I was sure of about coming into this April 20th area. All the way through, and it goes all the way through May 5th. So we'll have to keep I'm not going to say keep a close eye on something, but we'll have to watch it. Okay, now the main thing today is if you're in the commodity markets, the key prices are $16.25 in the gold. If we go below that, we've already broken in silver. Crude oil has stopped at the 13. Excuse me. Wow. Get these numbers messed up when I'm looking at the S&P, and then I'm thinking about crude oil. But the crude oil stopped at the 104.30 level, which was the 786. It took out the last week's high by just a few ticks and didn't go anywhere. That's another bad sign. The euro has also made that top up there potentially at that 132.30 level, and if it gets above that, then it's got a chance to run all the way to the 136, and that's what would give the U.S. dollar index the move to the 77 level if we get to that point. Well, I can hear the bell on the classroom wall is ringing here, so what we're going to do now is sign off, and I'll see you folks again on Monday, and may God bless.